Hello everyone, I am Wall Street Reporter. Today, I'm going to talk about the financial market system, its function, and profit logic. So, let's begin. Well, today's video will have 6 to 10 minutes, and we will have 6 topics. I will firstly talk about the 4 functions of financial markets, and I will divide the financial market into traditional financial market and innovative financial markets. And I will talk about the for profit logic and a survival guide for beginners. And finally, there will be a summary. So let's begin. First of all, the core functions of financial markets. Financial markets are platforms for trading financial assets like stocks, bonds, and currencies, acting as a bridge between fund suppliers and demanders. It provides risk management tools, offer liquidity, facilitate capital financing by connecting survivors with borrowers, discover price through trading to determine the fair value of assets. So, what about its significance to the society? Well, it is very vital to the economic growth because it can provide funding for business development and also optimize resource allocation through price mechanisms and also providing risk management tools to business and investors to help them hinge risk and stabilize production. Well, oh, and to better help you understand the financial market, I will divide the market into traditional financial market and innovative financial market. First of all, traditional financial markets has very well well-known market which is stock market. The stock market is a vital venue for corporate financing and investors' participations in corporate growth. With a global market value exceeding 100 trillion US dollars. Investors can earn return through capital appreciation, dividend income, and stock buybacks, but they must cope with stock price volatility. Next market is bond market. The bond market offers stable financing channels for enterprises and governments, with a scale surpassing 130 trillion US dollars and relatively stable returns. However, it has slightly lower liquidity than stock markets. Investors primarily gain income from bond interest, which is a low-risk option suitable for conservative investors. Next is foreign exchange market. The foreign exchange market is the largest and most liquid market globally, with a daily trading value of 7.5 trillion US dollars, serving as a bridge for international trade settlements. Well, for example, as a Chinese student, if I want to pay my tuition, I have to buy dollars and exchange uh RMB for US dollars. Then I just participate in the foreign exchange market. Next one is money market. The money market deals with short-term debt instruments with a scale exceeding 110 trillion US dollars, mainly used for liquidity management and short-term financing. And, uh, and finally, the commodity markets. The commodity market covers crude oil, gold, agriculture products, and so on, with a scale over 20 trillion US dollars and can hinge against inflation risk. Investors can gain from price fluctuations or take delivery of physical commodities. And next part is the innovative financial markets. Well, we have derivatives markets. The derivative market consists of financial instruments based on underlying assets such as futures, options, and swaps, featuring leverage and risk gauging capabilities. Investors can amplify returns using leverage, but must carefully manage risk to avoid excessive exposure leading to margin calls. Another market is called cryptocurrency market. It is very well known and it has already attracted a lot of international funds. The cryptocurrency market is characterized by decentralizations and blockchain immutability with some growing market size. Investors can profit through speculating trading, staking for money rewards, and DeFi participation. But they need to be cautious of market volatility and regulatory risks. So, what about the core profit logic? How do people make money through this market? So, here is a very simple wealth creation equation. Profit equals capital appreciation and the cash flow income minus risk cost, which is the fundamental formula for market making profit in financial markets. So, there are four major paths: buy low, sell high, cash flow acquisition, leverage amplification, and finally risk hedging. These four steps are very vital for all the businesses and investors. Well, for beginners, first of all, keep learning, continuously enrich financial logic, and also do not invest in what you do not understand. You avoid blind following and risky investments. Next, diversify investments across different asset classes to spread risk and reduce the impact of single asset fluctuations. And finally, adopt long-term investment strategies to leverage the power of compounding and achieve steady asset growth. Be aware of the three biggest traps. High leverage trap. High leverage can lead to margin calls. And also, be vigilant about project promising guarantees high return to avoid falling into investment traps. And also, avoid emotional trading, such as FOMO, driven buying and selling. Please maintain calmness and rationalities and develop reasonable investment strategies. So, in summary, financial market encompass various types, including stock, bonds, foreign exchange, derivative, cryptocurrencies, and investors need to grasp the core profit logic. For beginners, they should follow four major principles and to continuous learning, understand investments, diversify assets allocation, and long-term investment. Well, well, start with simulative trading. Familiarize yourself with market rules and investment strategies. Focus on 1 to 2 markets and participate with spare funds to accumulate investment experience and enhance your investment skills. So that's all. Thank you. Please subscribe to Wall Street Reporter and I will publish some following videos talking about the stock markets, the major industry markets, and also cryptocurrency market as well. Thank you.